Today on Forbes, the fall of Iran and Venezuela are a boon for oil tanker billionaires. On day 3 of U.S. and Israeli strikes on Iran, tanker mogul Nicholas Tsakos fielded repeated calls from his staff in London who were trying to secure insurance for his tankers sailing just outside the Persian Gulf, as premiums skyrocketed due to Tehran's retaliation against energy facilities in the region. In a phone interview from his Athens office, Tsakos told Forbes, quote, "We are in alert mode. We have 3 ships in the neighborhood there. But it's interesting times. We're taking advantage of the spot market, which is very positive." Tsakos has been in the tanker business for decades. He founded Tsakos Energy Navigation, a Greek tanker firm set up to transport crude oil and petroleum products, in 1993 at age 30. The firm, which went public on the New York Stock Exchange in 2002, is controlled by him and his 89-year-old father, Panayotis, a Greek shipping billionaire. While the tanker business has always ebbed and flowed along with oil prices and geopolitical events, this year has been shockingly good for Tsakos and his company, for what are arguably some unusual reasons. On January 3rd, the Trump administration captured Venezuelan President Nicolás Maduro. His removal opened the country's oil exports and allowed more Western tanker firms to resume operations there. One of Tsakos' ships, the Mediterranean Voyager, was the first tanker to load oil out of Venezuela that day. Tsakos says that spot rates to charter one of his ships in Venezuela soared to $110,000 by the end of January, up from $70,000 before. That's how much a customer, such as an oil firm or oil trader, would pay a tanker firm for a single ship per day with immediate loading. Now, after the strikes on Iran, he says that's up to as much as $160,000 for certain ships. He says, quote, "It's a good thing. I hoped all of this would not be because of this situation in Iran, but we are where we are." Those higher rates have also been fueled by disruptions to shipping lanes, both in the Red Sea, where the Iran-backed Houthi militia was targeting Western ships, and now in the Strait of Hormuz, where Tehran is effectively shutting down a key waterway through which 20% of global oil supplies pass every day. The higher rates have also led to a surge in tanker stocks. Shares in Tsakos Energy Navigation have jumped 69% since the start of the year, including more than 4% on Monday, the first day of trading after the strikes on Iran. Shares of Frontline, the world's 5th largest oil tanker firm, in which billionaire John Frederickson owns a significant stake, have performed even better, up 93% in the past 60 days. All of these factors have propelled the fortunes of the 13 richest tanker owners tracked by Forbes up by more than 50% over the past year to a collective $130 billion, largely due to higher stock prices and ship valuations. Even before America's military moves, prices of certain tankers were rising rapidly. For instance, demand for enormous tankers, known as VLCCs, that can make long-haul journeys, started to spike in December. Much of that has been driven by Sinokor, a Korean company that spent more than $2.5 billion in about 3 months rapidly buying up VLCCs to amass one of the world's largest fleets. There are reports that Sinokor is essentially acting as a frontman for Swiss-Italian billionaire Gianluigi Aponte and his firm MSC, the world's largest container shipping company. A representative for MSC did not immediately respond to a request for comment. Most recently, the price for these second-hand VLCCs has hit levels not seen in the past decade, with 10-year-old ships trading for more than $100 million apiece, according to maritime freight management firm Vesson Nautical and maritime services firm Signal Group. Frédéric Dibois, an analyst at Oslo-based maritime and energy investment bank Fearnley Securities, says, quote, "All of these vessels have been bought at prices significantly higher than the last time they were sold." Another boost to the tanker firms is the U.S. campaign against the so-called shadow or gray fleet, a group of more than 1,000 aging tankers registered in obscure jurisdictions that sail without Western insurance and obfuscate their location or conduct ship-to-ship transfers of oil. Long used by Iran and Venezuela to transport their oil to get around Western sanctions, they've also been employed by Russia since the 2022 invasion of Ukraine. For full coverage, check out Giacomo Tagnini's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.